Welcome, everyone. We are back with a fantastic panel here, the future of stablecoins, and we have a stellar lineup of founders from some of the leading stablecoin projects across the ecosystem. So today we are joined by Raf Kosman, who's the CEO of TrustToken, TrueFi, TrueUSD, Joey Santoro, who's the founder of Fei Labs, Manny, who is a co-author and advisor with Ampleforth, and Sam Kazemian, who is the founder of Frax. So as you can see, we have a fantastic lineup here, and we're going to dive right in with some different issues. Specifically, we're going to try to explore some of the trade-offs that we're seeing behind the stablecoin designs as we really step into a bigger DeFi ecosystem, and what role the different designs can play within the DeFi ecosystem. So everyone on this panel has created successful stablecoins that are really helping to reshape the way that we think about money and what is possible in DeFi. And yet each of you has really approached the design of your stablecoin in different ways with very different consequences and trade-offs. So I want to ask each of you to just comment on the overall vision behind the technology, the operational design decisions that went into the building your project, including how Chainlink plays a role, and some of the trade-offs that you made for your project. Let's dive right in. We can start with Raf and go around.
All right. Thank you for having us on, David. I'm looking forward to a great panel. So I'm Raphael, CEO of TrustToken, and we're the makers of TrueUSD, which is a $1.2 billion US dollar stablecoin. And TrueUSD, I think, has one of the simplest designs of any of the stablecoins on this that are represented on this panel. It's just backed one for one with US dollars. And we chose that because of simplicity. You know, we wanted to make a stablecoin that was really straightforward, really trustworthy, where regardless of how TrueUSD is trading in the market, it's always backed by $1. And so it's always worth $1. And you can just go to our website, you can redeem it anytime, you can purchase more using US dollars. And so I think it gives traders and DeFi projects and a lot of folks that are looking for a stablecoin that's very stable, very trustworthy, it gives them what they're looking for. In terms of how we use Chainlink, we actually, in order to be as transparent as possible about those reserves that are backing TrueUSD, we actually have an accounting firm that does a real-time 24/7 attestation of those funds, showing that the 1.2 billion TrueUSD in circulation are actually backed by 1.2 billion US dollars. And then we've taken that to the next level recently with Chainlink and putting those reserve values on chain in a Chainlink Oracle, so that DeFi projects and other smart contracts that are using TrueUSD can actually monitor that and even have a tripwire where if that actual collateralization underlying TrueUSD ever dropped beneath 100%, they could pause deposits, they could change how the risk parameters of the protocol, etc. They can really take that into account. So that's TrueUSD. Thanks for having us on the panel. I'll hand it over to Joey.
Yeah, totally. I think it's really novel, the attestations for Chainlink oracles, and I'm excited to dive a little bit more into how that powers your stablecoin. Because like you said, it's pretty different from the rest of us, and we all have slightly different takes on the stablecoin space. So I'm Joey from Fei Labs. I founder and protocol architect for Fei Protocol. The Fei stablecoin, the original vision is to be decentralized, fully on chain, to the extent possible, scalable, backed by this idea of protocol controlled value, which is sort of assets and reserves that are stored in smart contracts, so not in a bank account. And the protocol has full custody, so it can deploy those into lending markets, it can deploy them as secondary market liquidity, and it helps basically provide utility and liquidity for the Fei stablecoin. Originally, we had this additional concept of direct incentives, which means that traders are penalized for trading away from the peg and incentivized with an additional mint reward, kind of like a negative fee and a positive rebate for trading towards the peg. We no longer use that feature. I'm happy to dive a little bit more into why, but the primary peg mechanism is this protocol controlled reserve. and the protocol is actively defending the $1 peg on secondary markets. And we originally launched with a time-weighted average price Oracle. And we, through data analysis on chain, we realized that that Oracle was just not efficient enough, and it didn't update frequently enough to have an accurate price for actually buying the stablecoin, which is how more enters circulation. People can buy it for $1. So we switched over to Chainlink, and it was seamless, extremely easy to plug into our system. And that's providing additional security against rapid price movements.
Perfect. Thanks, Joey. Maybe Manny or Sam, do you want to jump in here?
Sure, I'll go next. I think Ampleforth is a little bit the odd man out since we're not a stablecoin, but we have a mechanism that's been used, I think, in other stablecoin projects. So I'm the co-author of the original white paper and an advisor. And so I can sort of walk through a little bit how it works and how some of these pieces could be used in other stablecoins in the future. So one of the key considerations for Ampleforth was just making the mechanism really simple and minimal and decentralized. And, for context, this is, going back to 2017, 2018. So a lot of the infrastructure that we now take for granted was just did not exist. And so the way that Ample works, right, it's kind of the first rebasing currency. What it does is it really transmits the volatility from price to the supply of the Ampleforth token. And so as you can imagine, Chainlink has been quite important in that transmission of the price information from liquid exchanges outside of crypto, right, into crypto. And so if, Ample is trading over, say, $1, right, every day, there's a time-weighted average price. And so the number of Amples in all user wallets kind of rebases a certain percentage, increasing the supply until sort of the price falls back to $1. And so the benefit of this, right, so it doesn't insulate you from the volatility of crypto. If you hold Amples, the numbers are going to shrink or expand really rapidly, right? The market cap has increased 300x. So that's, or 30x, sorry. So that's definitely, that's not a stablecoin kind of behavior. But what you do get out of it because of this kind of tokenized unit of account function is you do get stable contracts. So if I borrow 1,000 Amples, 2 years ago, and I have to pay them now, the dollar value of that $200 or $1,000 debt is about $1,000. Sorry, 1,000 Ample debt is about $1,000. So you get stable contracts out of this tokenization of unit of account, but you don't get the stablecoin kind of utility, which is that you kind of hold these pockets of liquidity without exchange risk. So.
Man, that was a great explanation. I think that's really fascinating. That it sounds like yours is the one stablecoin on this panel that even though it's always worth around $1, it still is something that you can invest in and can go up, 30x, 300x, you can actually make money on, which is it's kind of a mind-bending concept.
Yeah. I think so as well. I think stable contracts are valuable, and there's a way of creating kind of long-dated debt contracts, right, which you can then ideally use to then collateralize a true stablecoin, right, in true sense of the word. So we can definitely discuss that, in a little bit. So I'll hand it over to Sam now, though.
All right, thanks, Manny. So I'm Sam. I'm the founder of Frax. Frax is actually known for two things these days. Frax stands for fractional algorithmic currency, which is where we got the name from. And there's a wide range of stablecoins even on this panel. So what we kind of invented is that Frax is fractionally backed in the sense that there's collateral on chain. The entire protocol is on chain, decentralized. But the entire backing of the stablecoin is not 100% or over 100% like the MakerDAO model. So one of the first things we came up with was that there's this idea of stablecoins with no backing, such as Ampleforth, such as the original basis design. There are stablecoins with fiat backing, such as TrustToken and Tether and USDC. And then there's stablecoins that are over collateralized on chain with crypto. And with Frax, we were the first team that said, hey, For stablecoin, the most important thing is that it's stable, right? And at the price peg, and that doesn't necessarily require 100% collateral backing all stable coins in circulation. The same way a central bank keeps the exchange rate of something at a price target without having literally the actual thing in full reserves, right? So like if a central bank pegged to US dollars and they issued their own currency, they don't have one-to-one backing of literal dollars in their central bank. They just try to keep the exchange rate and defend the peg, which is what all stablecoins do. So with Frax, we said that, hey, why is everyone coming up with over collateralized, 0% collateralized? What's in the middle, right? What's between 0 and like 100 and 150%? What's that fractional, extremely efficient, extremely decentralized, algorithmic model where the peg is sound? At Frax, we've never broken our peg. We've been up since December 2020. I think perhaps one of the only algorithmic stablecoins that have the Lindy effect of always being within 1% of the peg bounds. And the second thing I actually am really excited to talk about today, and what Frax has recently gotten a lot of discussion about, is that we're working on the first crypto native CPI called the Frax Price Index. And what that is that it's the first attempt that I know of, at least, that is looking to define a crypto native unit of account so that algorithmic stablecoins, other projects can actually peg to this exchange rate rather than the exchange rate of the US dollar. And so one of the cool things that we're working on with Chainlink is that in order to build a crypto native CPI, you need the consumer price index, the actual TradFi CPI, brought on chain to apply either improvements, transformations, additions to that index with new index prices. And we're really excited to do that with Chainlink, and then also just build our own unique product. And it's a collaborative effort. It's not just with Frax. So I've actually had a lot of in-depth conversations with Joey and the Fei team and other guys about it. And it's something really interesting. So perhaps we can get into it. In fact, it's gotten so big that I think perhaps, as a testament to how grand of a vision it is, we might actually rename it to something even bigger rather than the Frax Price Index, something like the Stability Price Index or the Crypto Price Index or something like that. Thanks.
Perfect. Thanks so much, Sam. And we can definitely dive into all of you mentioned some of the future things you're working on, so maybe we can dive into that next. But I want to just mention it's really mind blowing hearing all of the mechanism designs behind these stable coins and how complex the design can be behind creating something that's a stable coin. And it's really amazing what's happening in the space around that. And all of you are really approaching it in super amazing ways. So it's really great to hear that. And maybe we can dive just into that a little bit more. Some of you mentioned what's coming next, what you're excited about. So you've made these specific decisions around how you're going to design the stablecoin. What are the applications? What are you excited to see happen in the space, and how do you want to see these applied for the future of DeFi?
Yeah, I mean, I'd love to piggyback a little bit off of what Sam was mentioning about the Frax Price Index, Stability Price Index. I think there's a lot of media attention right now around this idea that, DeFi, like what we wanted was a decentralized computer, and what we got was dollars on a blockchain. And I think there's something really powerful about the idea that we can peg to arbitrary price oracles and arbitrary price feeds, and those could obviously be powered by Chainlink. And so thinking about like what else can be stable, or what does stability even mean? It's a really powerful idea. One thing that really attracts me about the Ampleforth project is that I believe your like sort of peg that you rebase to is the 2019 US dollar. Is that correct?
Yeah. So that is currently $1.06 of today's dollars already.
Wow. How do you, so first of all, how do you get that price feed on chain? And second, like, yeah, like maybe like, yeah, how do you get that price feed on chain? That's the first question.
So I think there's a number of oracles that now feed into kind of the Ampleforth module, but I think Chainlink does provide, I think there's a CPI feed, if I'm not mistaken. So we sort of just get it off chain.
Get that CPI feed on the Frax price index stuff.
Yeah. So I was going to ask you guys, so when you say a crypto native price index, so I'm just thinking from, by the way, so my day job is as a financial historian. So sorry for some of the questions, but are you guys basically tracking like the number, like crypto native prices, like in certain markets? I mean, that's normally how price indexes came about, right? You would send someone to the market and see what's the price of gold today, what's the price of corn, whatever, and you build these series over time. You used to do it manually, but I'm wondering, how are you guys picking the prices within the crypto ecosystem to kind of generate this index?
Yeah, so let me just give some background on this, because I think everyone seems to be really interested in kind of exploring this idea. So a lot of what people are now discussing is that, like Joey was saying, is the dollar is kind of loosely pegged to the consumer price index, which is kind of the standard of living basket of consumer items that the Federal Reserve thinks that the average American should be able to buy across time. And, simplifying it a lot, but give or take something like that, plus minus around 2% inflation per year. Our original thought with the Frax price index was, what if we actually define a crypto native standard of living? So obviously it's going to require real estate, like rent prices, consumer items, maybe even improvements.
Have a Lambo in there, right?
Yeah, everyone needs a Lambo in there too, the Lambo price index. But the idea behind it is there should be probably some crypto native elements in there as well. So perhaps the Ethereum base fee, if Ethereum is going to settle all value, in the digital economy in the 21st century or something like that, so that the cost of settling on Ethereum, if you have this money, should kind of go with your standard of living. Now, obviously, what makes it into this price index is really important. When we started working on it, it was just us a few months ago, and then Joey and a few other projects reached out, and we realized that if this is going to be a legitimate peg, and by legitimate peg I mean things that multiple projects are actually going to hopefully peg to, so that there could be stable Frax price index or stability price index stablecoins, so that there could be curve pools or tight liquidity around these stablecoins, we're going to have to make it bigger than us at Frax, right? We're going to have to make it something that's more general. So we're talking to a lot of people, and one of the first things is maybe we rename this to something very general, right? Like the decentralized price index or the stability price index or something like that. And right now we're kind of at the stage of who is going to build the initial Genesis stablecoins with Frax and their projects. So it's a really collaborative effort. It's really an interesting idea, because I don't think anyone is doing this. I think we're like kind of the first group, even on this panel. It's one of the first conversations that's being had. And in fact, when I originally talked about this on Twitter, Balaji, who's also speaker at SmartCon around some of these topics, reached out to me and said, hey, this is something I'm extremely interested in. Balaji actually invested in Frax, and a lot of people said that this is something that's going to make the world better, right? It's not just like something fun or something collectible or something, but actually improve people's lives with crypto. So I think it's really important that we talk about it. So I always really like talking with Joey about it. They're at the forefront of this too with us. So it's been a great time.
Very cool.
So I have two thoughts, if that's okay. Oh, sorry, go ahead, Raphael.
Go ahead, Manny. I'll go after you.
So there's two thoughts here, and they kind of oppose each other. One is, to me, it's really exciting because the way that I think about it, at some point you're going to have a lot of crypto native economic activity, right? And I know we're all finance and history geeks, which is why we're doing DeFi, but ultimately I think crypto might be a world, the whole metaverse kind of concept. I think that might be a lot larger than probably DeFi in some ways. And I think there, getting a price series on the price of virtual real estate, virtual goods, that would be incredibly unique and powerful. The other thought, though, on the other hand, is that the network effects kind of around dollars are incredibly powerful, right? So we've seen this in the real world where banking systems get dollarized, even though the share of trade with the US might be negligible, right? And so Gita Kopina's research, right, at the IMF has basically been around this kind of dominant currency paradigm, where the US is just like 15 to 20% of world trade, and yet so much of trade is dollar denominated. And we've seen this historically too, where, a country might be dominant in trade, and then that country actually ceases to exist as it currently does. But then that currency unit lasts for hundreds of years later, just due to the network effect. So in some ways, dollarization, I think, is going to be really, really, really hard to break out of, especially because the US is still around,
Yeah.
So those are my two thoughts.
One thing I always say is like the dollar is like the SI unit of economic value, right? In order for us to talk about value properly, you need a common language, right? The same way meters is for distance, and joules is the SI unit for energy, so that we have a common unit to talk about those kinds of things. I always say, for now, the dollar is the de facto informal SI unit of economic value. People say it's not going to be for long, or people's BTC Maxi say it's going to be BTC or something, but it's the lingua franca of economics, I think.
Great, thanks, Sam. And I do want to let Raf jump in here, but real quick, I want to encourage people to drop questions in the chat. We have about 8 minutes left here, but we'd love to get to some live questions if any come up. So go for it, Raf.
Yeah, so Sam, I completely agree with the importance of the dollar. And there's something that Joey said that I don't feel like I can take lying down. He said, we wanted a decentralized computer and we just got dollars on the blockchain. And I think that what a lot of people actually want is dollars on the blockchain. And that while dollar-like products, algorithmic stablecoins, crypto-backed stablecoins, et cetera, are very interesting conceptually and have a very real use case within crypto. I think that actual dollars on the blockchain are right now they're the overwhelming majority of the stablecoin market. They have been for years, and I think that they likely will be for years. And part of the reason is because not only do people want a stable unit of value, which many different kinds of stablecoins can provide, but they also want to be able to literally on-ramp their dollars and off-ramp their dollars onto the decentralized computer to do all kinds of things. So, and that's something that fiat-backed stablecoins like TrueUSD are uniquely well suited to provide, right? You can just redeem them for for US dollars. You don't have to trade them for US dollars. That's a key difference. And so I think that we do have a decentralized computer, and one of the main use cases of the decentralized computer is trading and lending and borrowing and moving around real world assets such as the US dollar. I don't think that makes the decentralized computer any less useful or decentralized. I think it's actually one of its strongest use cases.
Yeah, totally hear that. And like, the statement very much was like partially tongue in cheek. Like, obviously everyone on this panel is working on a USD stablecoin in some form. And so, none of us are disputing the power of the US dollar here. And I think your approach is extremely powerful and uniquely suited to do this. You're literally putting US dollars on a blockchain. And of course, that's like instant product market fit and what the market really needs. And it's going to be interesting to see where else we take this decentralized computer and what we do with those dollars on blockchains. What else are you guys building out over at TrustToken to kind of push that forward and build out that utility? You were mentioning earlier something about merging TradFi. Like, what's going on there?
Yeah, so a couple of things. One is we have a DeFi protocol called TrueFi with lending pools. Right now, they're all stablecoin lending pools. And I'd love to look into getting some of the stablecoins that are represented here on the panel added to the protocol as well. But doing uncollateralized lending, which is, we think, a huge application for stablecoins on the blockchain. And then another initiative that we've got is actually launching other global currencies, not just US dollars, because there's no question, while the US dollar is primary today, both in traditional finance and in crypto, we think that there is a very global audience for crypto assets, and a lot of people want to be able to on-ramp and off-ramp other currencies. So we've actually been seeing a lot of growth recently in our other products: true Australian dollar, Canadian dollar, Hong Kong dollar, and British pound. So those are all things we're quite excited about.
Sounds great. Thanks everyone for commenting on that. We do have a couple of questions here. One is someone's asking about the divergence between CPI and FPI. I'm guessing that's the farm price index. Would that be a better peg to value? I don't know if one of Sam or Joey can comment on the specific type of index here.
I think, I don't know if it is the farm price index or Frax price index, which is the one we're making, but
okay. Got it. That makes a lot more sense.
So I think the question is the divergence of it. So what's really important here is this is the first attempt to try to create a legitimate peg or unit, not actually a stablecoin. Many people can create various stablecoins, from decentralized ones to centralized ones, or different mechanisms that peg to the FPI. And what's important here is the more stablecoins use this unit, whatever it might have, it's an ongoing discussion. We'd love for people to get involved with it, join our community, join some of the talks that Joey and I and the Fei and Frax team have and stuff like that. But the important thing is the more stablecoins that peg to this, the more legitimate it becomes as a unit of account, right? We just talked about how important the US dollar is itself, because everyone denominates things in it, right? The unit is the network effect, right? And in order to build a new unit that has strong network effects, think of what that would entail. That would require multiple teams with multiple stable coins, different mechanisms, all pegging to this unit, that there would hopefully be curve pools, right, that have tight liquidity around this unit rather than the peg of a dollar, or the peg of BTC pegs. It would be like FPI peg coins, right? It would just be a big pool there. And tight liquidity, like on Uni V3 range orders or things like that. And now we finally have the tech on chain, like Curve, Uni V3, all of these things, to create the network effect advantages around new pegs. That wasn't possible before, right? There wasn't deep liquidity at structural peg units, right? And now it's a good time to actually make a new unit. And so that's really exciting. And so what makes kind of Frax and Fei and the other stablecoins on this panel, like Ampleforth and even TrustToken, perhaps a fiat backed version of this, is that everyone can build a stablecoin that pegs to this, right? It's a fully new unit. It's almost like building on-chain monetary policy in a legitimized fashion, in a transparent fashion, and it's really exciting, right? It captures a lot of the imagination of what DeFi and global markets should be.
Perfect. We only have a minute and a half left here. So any closing thoughts from anyone? And I'm really looking forward to continuing this conversation with all of you as well.
Well, I think it's fascinating to see all the different kinds of stable coins that are represented here. If we had more time, I would love to hear from Joey more about what Fei Protocol is doing. I'm going to have to call him up after this and ask more about it.
Yeah, definitely would love to chat more. We're working on our V2 right now. So you're going to have some exciting improvements coming down the pipe. And also, I want to talk more to you guys. I want to hear more about Manny. When the 2019 US dollar, is that the stable price index that we need? It's and also you guys just got listed on Aave. At first I was like, how does that even work? but then it kind of clicked for me. I don't know. It's really exciting times right now, and yeah, thanks again for everyone for having us on here.
I propose that we close with Joey committing to do a house party like Rick did in San Francisco, so we can all come hang out.
I will host you guys. I don't know if it's a party, but I'll host.
All right. Well, we are out of time here, but thank you all so much for joining. We'll keep the conversation going around this. As you can see, Chainlink can be applied to many different types of stablecoins. So it's really great to see all the different applications and what all of you are building. So thank you so much for joining.
All right,
Thanks,
thanks a ton.
Thanks, everyone.
Awesome. Thank you so much, David. And the rest of the panel, you know, Sam, Raphael, Manuel, and definitely a party at Joey's house. So we're going to have fun with that.